Okay, perfect.
All right, starting the webinar.
Hello, everyone. Welcome to our webinar on the market trends. Excited to be here today. We have a packed program today. It's going to be very interesting. During the next 30 minutes to talk about the economy and the market with me, I have special guests. So let me introduce you now to them. Min Tridang, SVP Strategy and Finance. Hello, Min. Brent Dahl, EVP for Randstad In-House Services and Integrated Talent Solutions. Hello, Brent.
Good morning.
And Nancy Donofrio, Director, National Strategic Accounts. Hello, Nancy.
Hello.
Let's dig in. Again, we have a packed program. So let's get started with the economic and labor market outlook. We have a specialist here. We have our economy expert, Min. Over to you. So one thing's for sure, the economy has its fair share of twists and turns. So can you help us please make sense of it all?
Right, I will try. It's a hard job. But thanks, Marino. I mean, we hear a lot of things since the tariff started, such as Canada's unemployment rate, but it keeps increasing. It reached 6.9% in the latest labor force survey, and that is a high percentage indeed. And at that level, it truly means that there's an increasing number of workers who are looking for a job but cannot find one, right? But just like about everything, it's really important to dive into the details because yes, unemployment did shoot up, and that is indeed a direct consequence of the trade war. How do we know that? Well, the sector that has been the most impacted so far is the manufacturing sector, especially in Ontario, which is at this point the hardest hit province. So current tariffs are on the auto industry. So the Windsor corridor is really impacted, along with steel and aluminum, mostly in Quebec. But for Quebec, it's not so bad in some ways because even if you have tariffs, there are hardly any other alternatives when you think of it. So American metal companies cannot just produce more in a heartbeat or not that much. So expanding or building a steel mill can take 3 to 5 years and hundreds of millions of dollars. So maybe just one little caveat is that yes, to be seen if the tariffs going from 25 to 50% will change this equation in some way. So that we have to see. But the outlook is quite different from where you look in the country. So long story short, when you look at Ontario, we have a little bit of a harder time, but the other provinces are faring relatively better.
So in light of all of this, how confident are businesses in the current state economy? Do you see their confidence wavering?
Well, waiver is a small word, I would say. Obviously, since the tariffs and the uncertainty started to set in, you have business confidence that really dropped dramatically. So those charts you see here, they show the PMI. It's a confidence index for both manufacturing and services. And when they're below 50, that means there's a contraction. And they both, as you can see, drop below 50. And for a good reason, because you cannot invest and spend money if you do not know what's going to happen. So but then in the past month or so, there's a different trends that we started to see, and this involves kind of the new normal that we start to live in. The Trump playbook is increasingly understood by firms and governments, and some elements other than that became way more certain, such as the election of Mark Carney, right? And why it's really hard to project ourselves a couple of months down the road today. But we see more and more companies taking the risk of diving, investing, because there are still opportunities out there, especially when you look at Canada, the domestic market itself.
So how does that impact the job market itself? This is, of high interest to our audience today. So can you give us a portrait of the job market itself?
Yeah, sure. So we have seen, and after slowly, we saw a decline during the aftermath of the first tariff sunset, right, in February. But last month, we have seen a surge in job postings that I think my colleagues will talk a little bit about after. And this is broad across all provinces, which does signal some sort of normalization of labor conditions. So for sure, you have sectors that will still have challenges, like mentioned manufacturing earlier, but some sectors have never slowed down that much, right? Such as the finance, insurance, and banking sectors. Others related to blue-collar roles, for instance, had retreated, but are now somewhat back in demand. And if you consider the new federal immigration policy, you can say for sure that, remember the 6.9% unemployment we discussed earlier, this could perhaps reach 7.1 in the short term. But with fewer temporary workers joining the country, it will decrease through the year as we learn to live again with talent scarcity to some extent. And demand is going to stay moderate, but it will still be there, especially in the infrastructure side. So the consensus today is that we can expect a drop in unemployment and an increase in vacancies, although that's going to happen more on the medium term.
Thank you, Min. That was very interesting to have your perspective on the economy, and we'll have the opportunity to go back to it a bit later. But now I wanted to take the time to talk about talent. We do survey, probe job seekers and employees a lot at Randstad to understand where they're at in terms of their expectations and their perceptions of the market. So recently, we've done one of our work monitor surveys where we gathered responses from over 5,000 employees and job seekers across 7 markets, including North America. What strikes us as a major trend right now is that employability, meaning stability within a company or industry, has become workers' top priority, which is not a surprise by any means. In the context of uncertainty, it's normal that job seekers and employees are looking for some sort of security and employability. It doesn't mean that they're not looking for jobs. It doesn't mean that they won't change jobs. It's just that whenever they are looking for an employer, they are looking to see if this company is stable. Does that are they financially healthy? Are they able to make sure that they will be paid? So they're looking for this aspect of stability. So again, it doesn't mean that they won't change jobs. It's just that what they're looking for in the employer or in an industry is some sort of stability. So not really surprising there. What's interesting to note also is that, and by the way, 3 out of 5 would even choose stability over a job that they like or they're passionate about. So this is a very strong trend that we see. When it comes to flexibility, this is, again, we've seen it over and over again, like flexibility is really, really a key factor for staying or choosing an employer or staying at a company. And what's interesting is now with the return to the office mandates that the employers are moving to, people are now expecting, not to be working from home as much, but they do expect some flexibility when it comes to managing their schedule. So I have to go back to the office 3 days, 4 days, 5 days a week, fine, but I want to have autonomy over my schedule. So I want to be able to start, leave whenever it suits me. So as you can see, this is the most important factor among employees expected to return to the office. 65% want a more flexible schedule over having a higher pay. So they expect this kind of trade-offs that, yes, I can go back, but I also want to have flexibility with managing my time. Interesting trade-offs are also around work-life balance. Many are choosing to have less stress and more work-life balance over higher pay. So, for example, 40% have already taken roles with lower salaries because it meant that it would reduce their stress. So again, this is interesting for employers to note, because if you're not in a situation where you can offer, massive salary increases, you can always offer something else in terms of, again, flexibility, again, wellness programs, again, more autonomy. So again, this is a trade-off that's interesting to know for employers. Salary is important, but other factors are interesting as well. Employees are really interesting to have. To feel, well supported. Well-being is very important to them, so it's important to note from an employer perspective. Now that we've talked about this, I wanted to talk a bit about the supply and demand in the job market. So before we have here the sectors, but before that, Min, can you update us on the balance between temporary and permanent hiring? What do you see right now in the market?
Yeah, so what we see really is that temporary job growth across most type of roles with technical jobs such as skilled trades are growing, especially through projects, right? Some of those roles, and I think my colleagues will touch upon that, are a little bit less in demand, but we have the temp on the temporary side that's really going up. And with the advent of additional infrastructure and fast tracking of projects deemed as national priority by the federal government, that's going to be pushing this part probably a little bit further. So when you look at permanent placement, though, they have been strong, although we do see that temporary jobs are favored and growing faster. And that makes sense because due to the current economic conditions, when unemployment shoots a bit higher and vacancies are stable, well, you have some uncertainty there, right? The market has a little bit of slack, so the uncertainty leads to more temporary jobs at this point.
Thank you, Min. Now, if we look at the trend in terms of manufacturing and logistics, Brent, can you tell us what you see in your sector more specifically?
Yeah, for sure. Thanks, Eminem. Job postings trends, as we see on the board here, in manufacturing and logistics have leveled off. We're not seeing major growth, but we're also not seeing a drop. And there's a few key dynamics in play here that we have to think about. Firstly, job postings for entry-level and mid-skill roles have softened, especially in warehousing and production support, although we are seeing some industrial roles growing slightly for companies in wholesale and retail trade, along with a few manufacturing firms focused specifically on the domestic market. In high automation environments, the demand for skilled trades and technical operators is holding steady. And then in some regions, especially those exposed to US export volatility, what we're seeing, with companies that are less exposed to US export volatility, we're seeing some more pockets of increased hiring tied to domestic demand. But I will share, your comment was very valid on the Work Monitor. Talent is looking, this group of talent, even though there might be a few more workers out there, they are looking for security from their employer in terms of being financially stable, and also that flexibility. So although it might seem like there's a bit more supply available, the great talent is holding back, especially if they're in permanent roles right now. So I guess while activity is mixed, employers really need to stay agile and be ready to ramp up quickly also if the market confidence returns.
Absolutely. Do you see something? What's the trends that you're seeing, Nancy, on the professional sector side?
Of course. Yeah, happy to dive in here. So on the professional sector, job postings are steady overall. But what's interesting is the demand is shifting. So demand is increasing for mid-level professionals, primarily in compliance, audit, and business operations. And I'm seeing this at a huge scale because a lot of my clients are in the banking sector. Entry-level hiring has slowed as organizations streamline and look to do more with leaner teams, so leaner talent strategies here. Huge demand for hybrid profiles, which is super interesting. So people who combine finance or legal expertise with digital acumen and strategic thinking, we're seeing that very much elevated in the job market. Rules in BFSI are strong and will keep their course. And min rules, while not declining, are not growing. So status quo there, and that's due to lower demand in AI. So while we're not seeing explosive growth in job posting, the bar is rising, and the roles being posted are way more specialized and way more strategic.
Yes, and we see that across a number of roles, but the search for digital skills, AI, it's exploding, and it has huge impact on the profiles that are. And many, you can talk about it more later, but we talked about it how does that impact students and the youth, the younger generations, for example. But before we get to that, Brent, can you dig a bit deeper into operational sectors again, because there are some major trends that employers should watch for?
Sure. And maybe I'll summarize it in 3 points. The first one is policy shifts are real. And we read the news this morning and we see some more of those coming in. But going back a little further, the removal of the federal carbon tax is creating some flexibility in the market, for instance, while new US tariffs are pushing Canadian businesses to really have to localize production and really rethink supply chain. And this uncertainty has kept many cross-border manufacturers in a bit of a holding pattern. 2, skilled talent remains scarce. So engineering, trades, advanced manufacturing roles continue to be quite hard to fill, especially in high-tech and automated environments, which we're seeing more and more of. And my third point would be technology adoption is accelerating. We're seeing widespread investment in artificial intelligence tools, in robotics, in logistics automation. So flexible staffing models will be key for managing this transformation and especially staying cost effective in this unpredictable time that we're living.
Absolutely. On your sign and see, what do you see? Because again, you touched on it a bit, but again, like finance professionals, for example, are expected to have a host of knowledge about ESG, AI, digital compliance, etc. So, what are those trends that you see?
Well, you nailed it. So, seeing a ton of roles linked to ESG, AI, digital transformation, growing across finance, legal, and compliance, huge demand there. And I'm in the trenches of the BFSI world, so can speak to it. A new IPO rules now allow Canadian firms to go public with only 2 years of audited financials. So that's huge, which could drive more demand in capital markets. And starting in 2026, the Canadian Public Accountability Board will begin calling out audit firms with poor results. So that will raise expectations across the industry naturally. So even with the rate cuts on the horizon, trade instability could limit the upside here. So that's why organizations more than ever need future-ready for workforce strategies with a focus on three things: upskilling, adaptability, and regulatory agility. So that's really important here.
Yes, absolutely. So we've covered a lot of ground. And again, I just want to reassure our audience that you're going to have access to all of this, the recording, the webinar decks, and also we have a longer, more comprehensive report on the market trends that we're discussing today. So you're going to have access to that as well. And again, we're there to discuss that with you and help you navigate that. As you can see, there's so many things to watch for, both from the employer and talent side. So it's not easy to navigate, and that's our role to help you there. So if we look at the key takeaways and the things that really employers have to look for. So again, to Min's point, the Canadian labor market is stabilizing. It's not collapsing. But again, like it is subject to whatever is happening now, ongoing trade policy risks. We'll still keep monitoring this, and that's why we're doing those webinars, to make sure that our clients, prospects are informed about the market, and we can also help them with their decision making. Operational sectors remain in flux, again shaped by evolving trade dynamics. We saw recently the new Minister of Commerce, Mélanie Joly, talk about renewed government commitments when it comes to prioritizing Canadian steel and aluminum. So that will definitely have an impact on these sectors. Professional roles are evolving rapidly. Nancy, you talked about it. Digital fluency, ESG literacy, no longer optional. So that creates a pressure on the employers to find these talent with those specialized skills when the demographics are not helping and finding these talent necessarily. So this is an increasing pressure that we're seeing on the employers and also on the talent side to be upskilled and to have the most up-to-date skill base. So that's also interesting to note. So again, specialized and skilled talent remains scarce. So to bridge those skills gap, and I know, Brent, for example, you have great examples of skill-based hiring, going beyond traditional profiles, look at upskilling, internal mobility, being able to see beyond a traditional profile to see how you can bridge those skills gap. And again, it requires a lot from the employers, but this is a reality now that some skills are really going scarce and will be more and more difficult to find. Within that context, agility and flexibility is an absolute must, whether it means people having greater control over their schedules, or also from an employer perspective, deploying a balanced mix of permanent, temporary on-demand staffing, for example. That's why we developed the app to help employers hire people for last-minute shifts to make sure that they keep they are agile in their in being able to respond to their demand needs. So that's why the employers need to look at the full mix of workforce solutions to make sure that they can pull these levers, temp, perm, on demand, etc. So to make sure that they keep agile especially in a context that is so uncertain and turbulent. So those are the key takeaways. That's why we developed this model that you're going to have through our Adapt and Thrive content series. So if you go on our website and search for Adapt and Thrive, you'll see a lot of articles, ebooks, webinar recordings. It all ties together these talks, the Adapt model. So all of these topics we can help you with, navigate through this. Those are all potential solutions and things you have to think about as an employer. So the agility we talked about in terms of workforce solutions, differentiation. Again, employers need to be able to showcase what they have that differentiates. Whether it's these days it's stability, flexibility. What is it that you can showcase as a true differentiator? Transparency is a key for job seekers as well. They want to make sure that they align in terms of values to their employers. We see that more and more, especially with the younger generations. AI and automation must have. Again, employers are at different stages of this journey of transformation. It has an impact on their workforce planning. So again, this is a key part of where at Randstad we can also help with these projects. People development. So we talked about it, internal mobility, upskilling. More and more employers are developing all kinds of training programs, micro learning, etc. I think, Brent, do you have an example of this? I think you do, like some in terms of upskilling programs, micro learning. There's a lot of different examples that employers can implement to facilitate upskilling. Didn't you have a couple of examples there?
Maybe just a quick one, and it's one that we work with closely as well. But micro learning is so important. We're finding that talent tends to learn better in 15-minute chunks, 30-minute chunks versus taking a half day to try and absorb all the information. So providing access to that sort of learning that's also available on the talent's own time. So yes, blocking time during work hours is a tremendous thing employers can do from a talent engagement and retention perspective, but also giving them access to learn outside of work hours. So we work with a company called Udemy. It's a large online platform where we build custom learning paths for our clients that help them build talent retention and upskill their workers. But it's also a platform where workers can choose something that they're interested in learning as well and upskill themselves. So I might be somebody working on a production line, and I might want to learn how to start to code or how to build an app, and I don't always have that opportunity to learn. So when an employer gives access to small micro learnings where talent can then go and put that into practice on their own time or on work hours, depending on the context, it goes a really long ways. And again, I can't emphasize enough, a 2-day seminar more often than not is very expensive, but far less impactful than those micro learning opportunities.
Thank you, Brent. Those are very good examples in terms of, again, making sure that there are upskilling opportunities for employees. This is key, both from the employer perspective to be able to plan workforce skills that will be needed, and also from a talent perspective. Again, before we go into the question part, the Q&A part. So again, last point, the talent pipeline. So again, we talked about this, but it's important to diversify the talent pool to go with, again, like, are you looking into the younger generations? Some people that have retired and want to go back to the workplace. That's also a trend that we're seeing. There's a whole way. there's a whole pool of talent that you need to investigate and explore to see if there are some interesting profiles there and go beyond the traditional requirements. That's extremely important. And that's also our expertise to be able to look at those massive talent pipelines and help you pinpoint the talent that would be best for suited for the position you're looking at. So again, the Adapt and Thrive series that we develop is there for that. At any point, please reach out to us so we can help you navigate whether it's for your short-term, mid-term, long-term needs. We're there to help you navigate your workforce planning, workforce management challenges. Before we go into, I already have some questions there. So, but before that, I just want to thank my panelists today, Nancy, Brent, and Min. This is super enlightening and meaningful. This is the type of information that we all need to be able to navigate this in this uncertain context. So I want to thank you all again. Thank you to the audience. We have time. We have 2 minutes to ask a couple, maybe 1 or 2 questions. So someone is asking if we can talk about employability a bit more. What are the takeaway for recruiters? And again, I think it can mean many things. Talent are both looking at a way to be still to be relevant in their industry, in their company, but also they are looking for security. Do you think that employability is a trend that will keep on going? And do you think it's anchored in the current context? I don't know if Min, you want to talk about, and maybe that's where we can talk about the younger generations a bit there.
Yeah, sure. I mean, it's pretty broad, so I'm going to try to give like a little bit of a picture here. One of the things that, I think that's going to be very important, but one of the things that, we see is that, like Brent and Nancy mentioned, the entry-level jobs are kind of fading away in some ways, right? They're not coming back as fast as they used to be. Like we have like requirements for very specific skilled jobs, but at this point, like for entry-level jobs, we don't have that much of a comeback yet on the market. And that's a challenge because it's where you get your pipeline to get your skilled people, or you start by being a junior before you become a senior at this point, right? So today there's a gap. And, I think employability, especially for the younger generation, the students that come out of school, it's really rough today. Like I have so many examples of people who can't find a job, and that's because with the advent of AI automation, with the lower demand, like structural lower demand, and you have a hard time getting on the labor market. So when we talk about that, like employability is going to be, one of the key things, and again, Brent mentioned the micro trainings, like a lot of those things can really help that. So in my view, this is where we see that, we have a lot of efforts to make here to make sure that, everybody can get into that boat, right, in some ways.
Thank you very much. Again, don't hesitate to send us your questions. We're gonna again be we're still keep in contact and try to answer all of it. We're already at time, so again, I want to thank everybody. You're gonna have access to all of the materials that we discussed today, and let's keep in touch. There's so much to learn and to explore in today's labor market. So thank you, everyone, and have a great rest of the day. Thank you.
Joining everyone. Take care.